Coming up on Market to Market, the worst fire in a century roars through the Golden State. The lame duck Congress works on passing a farm bill. Hay exporters work to recover from a dockside dispute. Those stories and market analysis with Dan Huber next.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, November 16 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. Black Friday ads have replaced political ones as retailers look to improve on an already healthy season. Retail sales were up 0.8% in October. However, the Commerce Department suggests consumers are pulling back. Crude oil inventories increased an 8th straight week, pressuring prices to fall to their steepest level in 3 years. AAA reported gasoline is down 21 cents this month on lower demand. For the first time since January, the Creighton University Rural Main Street Index dropped below growth neutral. Some bank CEOs responded the negative impact of tariffs and low commodity prices are weakening the farm sector. Lame duck lawmakers of the 115th Congress may provide help for rural America via the 2018 Farm Bill. Before the new wave of legislators are sworn in, the House and Senate's conference committees is trying to find common ground on nutrition and conservation titles. David Miller reports on the bill that's been in limbo since July.
According to Colin Peterson, House Agriculture Committee ranking member, the main sticking point has always been state-level waivers which negate SNAP work requirements. Peterson's office declined further comment, citing the rapid pace of work on the final bill. Senate Agriculture Committee Chair Pat Roberts released a statement that Senate Agriculture Committee staff have been working to find a bipartisan agreement, saying that we have to get it done. Earlier in the week, Roberts and Ranking Member Debbie Stabenow were joined by House Ranking Member Peterson in working towards a compromise. House Agriculture Committee Chair Mike Conaway, whose chairmanship ends in January, had been steadfast in supporting the House version of the bill. Late Thursday, Conaway changed gears, saying, "I'm not ready to talk about anything but getting this done." At week's end, there was a flurry of activity that fell short of a decision. If both sides are unable to find common ground before mid-December, lawmakers will either extend the 2014 Farm Bill or let the multi-billion-dollar measure lapse and start over. For Market to Market, I'm David Miller.
The Southeast became the rain belt this week as copious amounts of moisture settled from Louisiana to Virginia. Conversely, a hot and dry 2018 in California has led to tinder dry conditions, even before debate flared on forest management. The fight against the biggest wildfire in a century has turned entire towns to ash and is far from over. Peter Tubbs has more.
The Camp Fire, burning its way through Northern California, is now the nation's deadliest in 100 years. At least 63 people have died in the fire that swept through Paradise, California. Nearly every structure in the town of 27,000 has burned. Most of the public infrastructure will have to be replaced.
This is my 4th time to California, all of which have been fires. And every time I come back, I say this is the worst fire I've seen. Yesterday is the worst fire I've seen. Paradise, unfortunately, likely will not be the same city. Just the amount of devastation. And all fires are bad. This fire is also unprecedented in a lot of ways.
Hundreds of police and National Guard troops are searching for victims in the ash, as over 600 residents remain missing. Thousands are now homeless.
Well, you feel terrible for these people. It's been devastating for them, and I couldn't imagine coming back here if this was my home. Our hope is that if there are missing people, we can find them and bring some closure to people that need that.
The 200 square mile fire is 40% contained, as cool weather has slowed the fire's advance. 3 fires in Southern California have destroyed homes northwest of Los Angeles and clouded the air for millions of residents. The southern half of California is in a moderate drought, with little rainfall in the last 6 months. Fire crews are working to prevent the flames from reaching additional residential neighborhoods, a challenge in the densely populated section of the state. From Market to Market, I'm Peter Tubbs.
Global trade is complex. Markets years in the making can evaporate over a misinterpreted word or labor dispute. The Port of Los Angeles is the busiest in the United States by container volume, exporting paper, animal feed, and scrap metal on those giant ships. Colleen Bradford-Krantz looks at how the hay industry weathered several of these same issues in our cover story.
In the summer of 2014, West Coast hay producers were well into their harvest season when contract negotiations between port workers and ship owners fell apart. For those growing alfalfa and other hay varieties for export, news of closures and labor slowdowns at 29 ports along the West Coast had producers listening carefully.
Indeed, even a financial hit for some companies. But on the macro sort of level where we look at the winners and the losers, overall it doesn't really mean all that much for the U.S. economy, or even here in Southern California.
Those growing hay for export disagree with assessments that downplayed the impact of the 9-month labor dispute. By then, many forage producers in California, Washington, and Oregon had taken a major financial hit, particularly those trying to get their products to international buyers in Asia and elsewhere.
That was a very difficult time for exporters here in the Imperial Valley or anywhere on the West Coast. We couldn't ship anything out. We had standing orders.
Marcel Van Dyke, marketing manager for the Port of Los Angeles, said the resulting congestion at the ports was especially hard for those with hay or other perishable products.
Some you cannot store too long, or it is very expensive to store in cold storage. If you cannot ship it to the market, quality deteriorates, and then you don't get your premium price in the foreign market. So it is very hard for the supply chain to deal with those disruptions.
Golden Eagle Hay, a Calipatria, California-based grower, began exporting alfalfa pellets out of the Imperial Valley in 1963. Long before many other producers in the area. By 1980, the company had shifted to bales compressed for transport in shipping containers. Today, many others have joined them in trying to supply the Asian market with forage. John Berker, Golden Eagle's general manager, says some of their longtime customers had to turn elsewhere when the company, which now buys 80% of the hay it sells, was unable to get animal feed delivered on time because of labor disputes at the port.
So we were not able to ship over there to Japan. This is just one example for Japan. So the cattle and the dairy cows have to eat. So what Japan did was they went and bought Timothy from Canada and Australia and oat hay instead because they had to feed their animals.
Those in the hay export business were suddenly stuck storing the old hay crop as the new season approached. Some turned to nearby dairies and horse ranches, matching or undercutting domestic prices in hopes of emptying their storage sheds. According to USDA, hay prices across the country dropped by 25% between 2014 and 2016, with steeper declines along the West Coast. Those who grew primarily for domestic customers also began to feel the pinch as the market flooded with hay originally bound for other ports of call.
Well, anytime you have an oversupply, the price will drop. Domestic dairymen, any cattle guy, they're pretty smart. And if they have offers for cheap fiber, they'll change their menu or change their ration.
The same scenario was playing out farther north in Washington and Oregon, where the ports were affected by the same labor negotiations. Hay exporters were reluctant to use truck or rail due to the slower delivery time that could leave customers waiting in Asia with a dwindling feed supply. The labor dispute was finally settled in February of 2015, but the ports needed several months to return to business as usual. While Golden Eagle weathered the storm, in part because of major customers from Japan and Taiwan who remained loyal, it took much longer for hay prices to rebound.
But at least we had a home for it. A lot of guys didn't have a home for it. They didn't have the relationships that we have, that we've built over 20 years.
Still, U.S. hay exports have continued to show signs of growth as some customers return to their original suppliers. A decision in Saudi Arabia to phase out forage production to cut water consumption is expected to continue driving demand. One Saudi Arabian company went so far as to buy land in the Imperial Valley to grow its own hay.
The traditional markets were always Japan and Korea, because they still have cows and all the other animals there, but they didn't have enough land to cultivate food for them. But you see now also more the Middle East is coming up.
An unusual agreement to extend the new labor contracts at West Coast ports from 2019 to mid-2022 may have contributed to overseas customers having increased confidence in U.S. producers.
Most of that cargo is coming back after the actions are winding down, and now with an extension of the contract, that gives a lot of trust in the West Coast again.
Despite the good news, the major hay exporters working 200 miles away in the Imperial Valley are unwilling to get caught in the middle again. Most are making contingency plans.
It was definitely a difficult time. This one hurt. It really did.
For Market to Market, I'm Colleen Bradford Krantz.
Next, the Market to Market report.
Pre-20 positioning provided both optimism and pessimism on the trade this week as harvest neared completion. For the week, December wheat improved a nickel and the nearby corn contract fell 5 cents. The January soybean contract surged on news of China's written response to U.S. trade demands, but was offset by the biggest single-month crush on record to end the week up 6 cents. The December soybean meal contract increased $5.30 per ton. March cotton finished $1.57 lower per hundredweight. Over in the dairy parlor, December Class 3 milk futures added 42 cents. The livestock market turned positive as the December cattle contract gained 77 cents. January feeders improved $2.73, and the December lean hog contract surged $4.28. In the currency markets, the U.S. dollar index declined 40 ticks. January crude oil ended a 12-day sell-off, but still finished lower by $3.68 per barrel. COMEX gold improved $14.40 per ounce. And the Goldman Sachs Commodity Index dropped nearly 8 points to finish at $433.70. Joining us now to offer insight on these and other trends is one of our regular market analysts, Dan Huber. Dan, welcome back.
Thank you very much.
Dan, let's start here talking about the wheat markets. We've been trading in this sideways pattern. What's it going to take for us to get out of that?
Boy, it's going to be a challenge, you know, and probably the most disappointing thing about this week was we started out with a real boost on Monday. It actually pushed wheat up to the highest levels we'd seen in over a month, Chicago wheat at least, and then just kind of drifted apart from there, and we're under pressure the rest of the week. So, yeah, you know, we certainly know that there is an abundance of wheat worldwide, so it's not like anybody really has to chase after it. But I think ultimately we're going to come back to that realization that, you know, a good portion, well, 50% of the world stocks sit in China. Mm-hmm. And, you know, the rest of the world has had a little more difficult time. We know Australia had a challenging year for production. So, you know, I think we're really setting the stage where any kind of crop problem as we move into this year. And, of course, you know, we're not having a great finish to the planting, I guess, up in the some of the winter wheat areas. So, it's really not going to take much to get the wheat started and moving, but same token, we just need that spark in the weather to make it happen.
And are we looking long term here for that weather issue? Are we looking beginning of 2019, the summer of 2019?
Well, to a certain extent, you've got to really look out into 2019 to get. We always try to kill the winter wheat crop a couple times during the season, and that usually doesn't seem to carry us too far. But let's not forget that we right now are starting to see an El Nino develop again. Brings a lot of uncertainty, a lot of volatility into weather. There's no perfect way to analyze how that'll impact markets or impact growing seasons, but certainly he's going to start throwing a little more risk factor in there. So and generally speaking, that's not a good thing for the South American, particularly not South American, but the Southern Hemisphere crops, particularly Australia. So they could have a second year of some issues coming up.
Dan, I think another big question going on right now in the wheat markets as you look at Chicago soft red wheat versus KC hard red winter wheat. Why are we seeing such a spread there between those two?
Well, of course, I think a little bit of production out of Kansas City this year than we saw out of the soft red markets. So less of a concern as far as supply there overall. So like I say, some better weather conditions for the to finish off that with what we had in the spring and the hard wheats this year. So.
Dan, I've got to ask. Some market analysts say corn is the bullish story right now in the grains. Do you agree with that?
Corn has probably the most bullish setup. And now, granted, a week ago it was throwing a real curveball when China readjusted all of their inventories. We went from really what looked like the lowest stocks to usage ratio since the mid-90s. All of a sudden, we double those numbers. But here again, just like the wheat, 60% of that inventory sits in China, and that inventory is not going to go anywhere else. So, the corn market really sits, I believe, in somewhat of a powder keg. So, but traditionally, wheat is the one that tends to lead the corn more so than the other way around. So maybe they're going to join hands to do it together this year. So
that was going to be my next question, Dan. Do we need wheat to rally to get corn to move kind of also out of this sideways trend?
Oh, certainly. Wheat is always potentially a substitute. And of course, the rest of the world is very used to feeding wheat if it is a competitive product out there. So absolutely, I don't think you can get corn carried away without having the wheat come along with it, or maybe even lead the advance. So.
When we look out longer term here, December 19 is trading somewhere hovering right around $4. Should producers be looking to lock in some of those sales this far in advance?
Well, I think so. And again, it's the old adage that one in the hand's worth two in the bush. And, we look over the last 4 years between 4 and extreme of 450, but really between 4 and 430 has capped the corn market year in, year out. Now, none of us, I guess, know exactly what the weather's going to be this coming year, but we do have a pretty good idea that we're going to see probably 3 to 4 million acres additional corn. So that limits some of the potential until we get to a weather problem. So if you can make money at $4 corn, not a bad place to start laying in some hedges.
You said 3 to 4 million acres here transitioning from, I assume, soybeans into corn.
Correct.
If we get a trade deal in place, let's say end of 2018, although I think that's maybe a little optimistic.
Right.
Let's say beginning of 2019, before farmers are in the field, we get a trade deal in place. Do you still see us switching that many acres over?
I would say yes. In one respect, that we've had such an increase in beans over the last several years. I would tend to say yes. Boy, even with a trade deal in effect, it's going to be difficult to compensate for what we've lost as far as volume. If you look at it at this point, marketing year to date, September 1, we have exported 407,000 metric ton of beans to China. Last year at this point, we'd done 10 million metric tons. So it's going to be tough to make up for that lost ground. Plus, some of that business is probably not going to come back for many years, if at all. So I don't think we're going to need to have the bean acreage out there that we have had for the last 2 to 3 years.
Dan, you teed me up perfectly here for our social media question.
I knew that. That's why.
We've got Tim in Crookston, Minnesota. He said, is the proposed meeting between the U.S. and China next month a buy the rumor, sell the fact kind of meeting?
It certainly holds the potential for that. Of course, the market, of course, had two little shots in the arm here in the last 2 weeks. One, first the Trump tweet that our discussions are going nicely, and then this written letter from China that, here are a list of concessions we would be willing to make. So at least things are warming up. Yes, it probably tends to say, I would say particularly if we rally or stay strong into that meeting, yeah, we've probably built up too much expectation for what could come out after from the meeting itself. I mean, to think that we would actually come up with some kind of a new agreement trade deal would seem very optimistic. So yes, I think it's a pretty good probability that we'll maybe become a little disappointed away from that one. And of course, there's always that old adage that if you rally into Thanksgiving, chances are you might head lower into Christmas. So it's like I say, I think the adage is if the Bears get turkey for Thanksgiving, the Bulls are going to get for Christmas, and vice versa. So we'll see who wins out for the turkey this year. So,
I like that. That's a good adage. The other thing I wanted to make sure we talked about during this market in particular is the NOPA crush numbers. We had the single largest crush in October here. Is that supportive or threatening to the soy complex as a whole?
Well, really, I don't think threatening by any stretch of the imagination. Oil stocks were significantly higher than a year ago, but that was the 6th month in a row we've actually reduced soybean oil stocks. And there is one of the bright spots in the bean complex, although the meal prices don't necessarily reflect it right now, but we have seen very solid soybean meal exports. So, I mean, we are starting to pick up markets that maybe have been displaced because Brazil is moving so many beans to China. So no, I think that big number, we weren't seeing a corresponding buildup in inventory. So that would say demand for those products is pretty stout at this point.
Can demand sustain at these levels for soy meal?
Well, certainly going to be a challenge. We domestically, I guess I'm pretty optimistic on what we're looking at in the livestock industry. We're still looking at 2 to 3% more hogs out there. The cattle numbers seem to be maybe on the rebound again. Demand certainly looks like it is on the increase in the livestock numbers. And, yes, China is telling us they're going to cut back on the use of soybean meal and go to either alternatives or feed less proteins than they have in the past, which is really pretty believable. But that said, I think the issues they've been having over there, of course, with the African swine flu really could be opening some doors on some trade for the livestock industry, which I think is a positive for the feed grains as well. So
let's talk about the livestock industry since you just segued us right into there nicely. Heading into holiday season, Dan, we usually have strong seasonal demand for the proteins.
Sure.
Will we continue to see that in the cattle market in particular heading into 2019?
The cattle market, of course, this is the time of the year where people tend to back away from the cattle just a little bit. But it is interesting. We have seen a trend, partially because of the depressed prices, cattle and pork both, of people moving away from poultry consumption back into pork and beef. And I think right now, even the USDA is projecting about a 4% increase in pork consumption, 2.5% increase in beef consumption.
You're talking domestically?
Domestically.
Okay.
And maybe 1% in poultry. So, I mean, I think those are good signs. Granted, yes, this is the time of the year that you generally aren't going to see people out really stocking up on the beef, unless they find some really good bargains there. But the pork numbers have been pretty optimistic and pretty encouraging. So yeah, I mean, looking into 2019, I think the picture is looking pretty bright here right now.
Does Tuesday's reversal in the live cattle market indicate to you that a low has been put in for the short term?
I don't know if I'd go quite that far yet.
Okay.
I mean, we've been going through a nice correction, probably a needed correction, and we've really kind of displaced a lot of the what you would normally consider seasonal patterns this year. I mean, because of all of the trade tariff talk. I mean, we seem to peak both cattle and hogs far earlier than we should have. Maybe we're coming out of the lows quicker than we should have as well. So hopefully we'll get back to a little more of a normal seasonal pattern. But here again, I think hogs even more so than the cattle. Look out to the summer months right now. I mean, we have got June, July hogs at the levels that we've peaked at or have been the highs for the markets for the last 3 to 4 years. So.
Dan, why is that going on right now? Is it African swine fever?
Well, I think, the anticipation that, yes, we're going to see a solid pickup in demand. I think one of the limiting factors right now has been the strength of the dollar we've seen recently. But, boy, I think if you peak that dollar and start turning it back down, you could really see some excitement, particularly in those deferred months in the livestock.
On Friday, we saw a limit up close in the hog markets. What happened?
Well, here I think a realization of all the factors we're talking about there. That we've got from a demand standpoint, certainly the numbers production numbers are getting larger. But if we have demand growing at 4%. production numbers growing at 3%, that's still a good mixture for seeing higher prices.
Is there any reason at this point in time, with African swine fever and all things considered, for China to start importing U.S. pork yet?
You know, I think that it very well could be happening already. And I guess we really shouldn't leave out what happened earlier in the week, which was the announcement that JBS signed an agreement with Alibaba. And of course, Alibaba is kind of like the Amazon of China. To sell $1.5 billion of animal products, beef, pork, and poultry, to China over the next 3 years. So, I mean, obviously they believe that there is going to be a big pickup in demand. Now, granted, JBS is a Brazilian company, but we also know they, very bought out Cargill's hog operations here in the U.S., own Pilgrim Pride, or a good portion of Pilgrim Pride. So I think they're really setting the stage to try to take advantage of what they think is going to be a booming livestock market in China.
All right. Dan Huber, thank you so much.
My pleasure. Thank you.
And thank you for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.